So when a stock is powered by these huge global trends like nuclear power,
Yeah,
it can feel pretty unstoppable, right?
absolutely.
We're talking about Uranium Energy Corp, ticker UEC. It's really hitting new highs, just, well, flying close to the sun right now. But is this real strategic momentum, or is it, a massive valuation risk? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks.
Yeah, that's really the core question for this deep dive into UEC. Our mission here is to sort of synthesize the market dynamics. And we're using our research based on data we pulled this morning, October 13th, 2025, around 7:48 a.m. Eastern Time.
Okay, and setting the scene a bit, the broader market is definitely helping today. We are absolutely in a risk-on mood. You've got the S&P up over 1%, NASDAQ is even stronger, up, 1.6%?
You're leading the charge.
But let's be real, the economy still feels kind of fragile underneath. We keep hearing those whispers of recession, especially from places like California, New York.
The Miller states, yeah.
Exactly. And with OPEC reporting soon, and a Fed speech this week, volatility is probably going to stick around.
It definitely keeps things interesting. But what's fascinating with UEC is how it seems to be just sidestepping those short-term economic worries.
Yeah.
It's really leaning into that strategic long-term story, the demand for nuclear energy.
Right.
And fundamentally, they look strong. They just raised another $30.6 million.
Adding to that huge pile of cash they already had.
Exactly, boosting their war chest to over $200 million now. And this new capital, it's specifically to fast-track building an American refining and conversion facility.
Ah, okay, so that's the big catalyst everyone's watching.
Precisely.
And analysts seem to get it. The ratings are overwhelmingly positive. Almost 90% are buy or strong buy, and that fueled the stock, right? It jumped nearly 11% last week, pushed past $14, hit a new all-time high.
And this is where things get, well, complicated. We run into this massive conflict. The story, the narrative, it's fantastic. But the traditional valuation numbers, they're just astronomical.
Astronomical.
Well, if you look at a standard discounted cash flow, the DCF analysis, which tries to estimate future value based on cash flows, it puts UEC's fair value at only $2.25.
Whoa, wait, $2.25. Compared to trading over $14, that's a huge disconnect.
Massive.
Doesn't that just mean the DCF model is kind of broken for this type of stock? Like a high-growth strategic resource play?
I think it does, yes. Often, traditional DCF struggles with these strategic resource stocks, particularly uranium right now. It has a hard time pricing in things like geopolitical risk, potential resource scarcity, long-term energy security contracts.
Right.
When UEC talks about building U.S. refining capacity, that's a huge strategic move. It potentially reduces reliance on places like Russia.
So investors are paying a premium for that security.
An enormous strategic premium, yeah.
Yeah.
It seems to be completely overriding the basic financial math of the DCF at the moment.
Okay, so fundamentals are sending mixed signals, let's say. What about sentiment? What are traders thinking?
Well, it's a classic split, really. A tale of two traders. On one side, you have the options market. It's incredibly bullish. The put-to-call ratio is way down at 0.23.
Wow, okay. So for you listening, that basically means for every, say, 4 bullish bets that the stock will go up, there's barely one defensive bet that it'll fall. That sounds like strong conviction.
Very strong. And we're seeing a lot of action, heavy buying, especially on those $14 strike calls. People betting it stays above or goes higher.
But there's always a but, isn't there?
There is. The bears haven't packed up and gone home. Short interest is significant. We're looking at 12.76% of the company's free float being sold short.
12, almost 13%. That's a pretty big group betting against it. They must think that valuation bubble has to pop eventually.
That's the bet they're making.
Okay, but with that much short interest, doesn't that make UEC a potential candidate for a short squeeze if the bulls manage to break through the next resistance level?
Oh, absolutely. That risk is definitely there. A squeeze could add fuel to the fire.
So how do you weigh that? The squeeze potential versus the valuation bomb?
You weigh it with momentum. And right now, if you look at the technical picture, synthesizing the indicators, the trend is just powerfully, undeniably bullish. Both short-term and long-term gauges are pointing up.
Okay.
Things like the RSI, the Relative Strength Index, it's running hot over 70, which confirms a strong breakout. Price is well above key moving averages like the 50-day.
And volume. Is money actually flowing in?
Volume concerns it. It's strong. It's consistent buying pressure. We saw a big spike recently accompanying that surge. and volatility is picking up, which often suggests we're in a breakout phase, accelerating upwards. Look at that pre-market gap up today, around $15.61.
Okay, so the technicals are screaming go. After weighing all that, the strong story, the crazy valuation, the split sentiment, the powerful technicals, what's the final verdict from our research?
We're landing on a cautiously bullish outlook.
Cautiously bullish. Is that cautious enough given that DCF number suggests, what, like 85% downside potential?
Well, the caution is absolutely needed. But right now, short-term momentum seems to be king. The trend is just so strong, the strategic catalyst, that new facility is powerful. It's hard to fight that combination in the immediate term.
But the risks are still there.
Definitely.
Yeah.
That high short interest, the stretched valuation, it means any negative news, whether it's about the broader economy or specific to the uranium sector, could hit the stock hard. We have to respect that financial gravity, even if it feels like it's been suspended for a while.
Got it. So for you trying to navigate this, what are the key price levels to watch?
Okay, bulls really need to see a sustained break and close above $15.86. That would signal the next leg higher is likely underway.
And for the bears?
Bears are likely targeting that $14 level. It's psychologically important, and there's a lot of options activity around there.
And the absolute line in the sand, where does the bullish idea break down?
For us, the invalidation level would be a close below the previous day's low, which was $13.65. A close below that really undermines the immediate bullish structure.
Okay, so UEC really is a fascinating case study, isn't it? It's fueled by this strong narrative, powerful momentum, but it's constantly shadowed by that valuation reality. It feels like the trend is your friend for now.
But maybe keep one hand near the eject button.
Exactly. The big question is just when or if that strategic premium and the stretch valuation finally collide.
That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.